Hello, everyone. I'm Andy Wong, and welcome to the Australian Lifestyle Investment Channel. Over the past little while, I've received a lot of questions from media outlets, friends, colleagues, and even clients from all over the world asking what might happen to the Australian stock market and the Australian dollar if the US really does go into a recession. They're also curious if there are any assets that could actually benefit from this situation. If you have similar questions, make sure to pay attention to our tutorial sharing today. As in the past, this teaching sharing does not have any investment suggestions, but there are a few suggestions. Remember to subscribe to my YouTube channel, like my video, and introduce it to your friends. You can also put some questions in your message area. I will try my best to answer them every day. Okay, so in fact, the reason why the United States is in such chaos during this period of time is because everyone knows that Donald Trump has imposed tariffs, sometimes, and sometimes no tariffs, which has made companies all over the world and even some consumers feel discouraged. So, everyone has started to speculate in this market, and the US economy may finally be separated in a few years. We have finally entered a recession. Remember, this is just a market hype. I have also shared with you that there is actually a chance that it may not fall into a recession. Just like in 2022, there was an economic recession in one quarter, but it did not enter an economic recession. So I talked. Hey, of course, everyone will be shocked at this moment, but sometimes we have to look at it rationally. Is there a significant change in the fundamentals? Are there systemic issues in the economy? Or is it just a cyclical interpretation? There are a lot of questions here, and I'll be honest, we could only follow up on them one by one in the future, but today, I'll try to reference some past scenarios to see what changes might happen to Australian assets. Let's discuss how a potential US recession might affect your investments. We'll examine the impact on both the US and Australian stock markets. In 1973, inflation rose and then fell, but the economy struggled, leading to stagflation. The US stock market dropped about 50%, and the Australian market fell 40% to 50%. During the dot-com bubble, the US market dropped 49%, while the Australian market fell 20% to 30%. The financial crisis threatened the global banking system, causing significant market impacts. The oil crisis was just a few years ago. Most KOLs will talk about it all day long. There are many different inflation data during this period. After that, it was called a depression, and then it fell. But I don't know what the economy will be in the future. Well, during this same period, inflation rose again, which was what we most feared was stagflation, or what we call a depression in the United States. At that time, the US stock market probably fell by 50%. Actually, Australia, they all dropped by about 40% to 50%. And that's why I went to the dot-com bubble. Even if it has changed from technology stocks to US stocks, it has fallen much more than the Australian stock market, even if the Australian and US stocks fell by 49%. What about the Australian stock market? The financial crisis, which has fallen by about 20 to 30%, has just come and everyone is most shocked. The financial crisis really affects the global banking system. Why did the US stock market have problems at that time? Ytong Machinery Australia has fallen by about 57% because many of their stocks are financial stocks. If we add more stocks, everyone is worried about an economic recession. That is to say, there will be an economic recession in the world. So what? What about the Australian stock market? All experience similar declines to those of US stocks. So, during the COVID-19 pandemic in 2020, the US stock market dropped about 34% in just 1 month due to various liquidity risks, and everyone was completely at a loss. During that same period, the Australian stock market also saw a similar percentage drop. However, the most noticeable difference was, what's the situation with recovery or a time? Of course, there are many different factors that affect the stock market, which is slower than that of the US stock market, but at least this one is for everyone to refer to. Hey, it turns out that if we go into a super big crisis, a large stock market crash is actually an impact of globalization. Here, I want to stop and ask everyone, have you ever thought that if we are not experiencing an economic recession at this moment, but are experiencing market speculation, or if it turns out that there is an economic slowdown, it may really last for a quarter and a half. The economic growth in the United States suddenly regresses, and it may even regress for 2 consecutive quarters, which is really a technical recession. But after that, it is just a cyclical situation that is very fast. The economic growth rate has already started to rebound. Have you compared this? Or have you thought about whether, in this scenario, the stock market's pullback is as terrifying as a stock market crash? I can tell you that it usually isn't as scary as a stock market crash, typically, if we look back at a lot of past data. Actually, taking the US stock market as an example during a midterm adjustment, which refers to a short-term economic downturn or recession, the typical pullback is around 12%. This often leads investors to see it as a starting point for buying opportunities. So this is something you can consider for yourself. Now, regarding your own risk tolerance and investment amounts, you might want to think about whether, since the US stock market has already dropped significantly from its highs, over 10%, it might be time to assess whether the market has possibly overreacted to Trump's influence. Is a recession really going to happen? This is definitely worth reflecting on. You might want to think about your own risk tolerance and investment amounts. For instance, if the US stock market has already dropped significantly from its highs, over 10%, should we start to assess whether the market has possibly overreacted to Trump's influence? Is a recession really going to happen? This is definitely worth reflecting on. I believe that whether you are a friend living in Australia or an international investor, when you think of several assets in Australia, you will pay attention to it, and it must be the Australian dollar, because whether you are buying real estate, stocks, or even some other investment tools, the trend of the Australian dollar may be one of your considerations. Here it is, very simple for everyone to take a look at, and just take a look at the picture. I will let you see if there is a large-scale economic recession. Under a big crisis, what is the performance of our yuan? You can see it very quickly, because overall speaking, if there is such a big crisis, the economic recession may be caused by changes that may occur in the world. In fact, our yuan was among the past 4 events. In fact, the magnitude of the correction was the highest, and the largest. Hey, it's about 30% to 40%. But at least it's about 15 or 16%. So under these circumstances, everyone has to think about it. What is our yuan? And I have to think about it again. Did you overreact to this crisis? In fact, the situation has quietly begun to stabilize. Could it be that the market is actually not as nervous as the media made it sound? Since we are talking about the Australian dollar, I would like to respond here. A friend asked a question in our YouTube message. The question was that Australia produces steel. If Trump increases tariffs on April 2nd, will it affect the Australian dollar by 25%? Will it depreciate in value? In fact, our first question is this. I think no matter how much tariffs are added on any given day, I think the most important thing is for us to understand Australia. Of course, everyone will think of it. There are many different kinds of steel and different products in the society, but what exactly is this steel? And what does it have to do with the United States? We can learn from the black picture. In fact, in Bloomberg's data, will we see the original relationship between the United States and Australia in steel? Actually, it's so slight that we can just talk about it directly. In fact, it may not have such a big impact. Yes, but of course, as we have been going through a lot, especially post-COVID, a lot of our supply chains have changed. In fact, for the time being, Australia may be focusing most on steel rather than its own economy. But if it is really related to tariffs and steel, then it may be something to worry about. The 3 major users of Australia's steel exports are China, Japan, and South Korea, right? If the United States adds tariffs to these 3 countries, how much direct or indirect impact will it have on their economies? And how will it indirectly affect Australia's impact on the Hong Kong railway industry? Well, this is something we can only see gradually, but it is temporary. I see the market reaction. Maybe they think that the US tariffs will not have any impact at all. For the time being, well, it is really not at all. Which countries are we focusing on? Why, maybe everyone doesn't have much reaction to this pessimistic scenario for the time being. I can only say that in theory, tariffs will have a negative impact on the Australian dollar. But the question is whether the market has already priced in a lot of these changes in advance. In the short term, it might not react as strongly until the economic situation suddenly worsens. That's when we might start to see more pessimistic scenarios reflected in the Australian dollar. What does it mean? Currently, we're examining the technical trend of the Australian dollar. Referring to past episodes, we drew a technical analysis chart showing the Australian dollar is in a large wedge pattern, and that remains. We should watch this red dashed line short term for a breakout. If so, the wedge may conclude. At this point, in the next weeks, after central banks' rate decisions, reactions will follow. As economic data arrives, we'll see if the market prices in these traits, especially with a recession. Then, the Australian dollar trend may clarify. If there is a chance, this big speaker forum will also have a chance to start and finish. Is that a little bit different? Even if I think it may happen in the next week or two, you may see many different central banks discussing interest rates, and there will be more reactions, and some economic data may start to affect the market. Continue to price. If there is a recession, we will see that the possible trend of the Australian dollar will gradually become clear. Okay, I have talked about a lot of pessimistic things at the beginning. How about we take a closer look at what happened? If it was really during the recession in the United States, what assets did well in the past? In fact, it was the price of gold. The price of gold was so fast for everyone to see. What if the past 4 relatively large systemic crises caused some recession? The price of gold varies at different times. There will be some increases from time to time, ranging from single digits of 7% to 100%. Even larger increases can even approach 100%, that is, 90% or so, have occurred. So I think the most important thing is just look at it. It turns out that there is really a demand for hedging. Of course, the price of gold that we are concerned about is not just a demand for hedging. In fact, we will also see it. For example, we say it all the time, all over the world. The debts of imminent are getting bigger and bigger. These dialogues are similar. It is possible that there is always support for the price of gold because of various unknown reasons, or because I heard that Germany was issuing bonds again, and there was a lot of silver paper printing. The price of gold may have been supported, so at the time of my recording, in fact, the price of gold has actually reached a historical high that night, exceeding $3,000. It has changed based on the technical trend, and everyone will see that it is moving. The rising channel is close to a trend at the top of the channel. I will take a closer look at it. I am not here to comment on the short-term trend of gold prices. There are too many comments, because in fact, I am not involved in the gold price. I will start watching it now. Well, 2 years ago, in 2023, starting from the third and fourth quarter of the year, in fact, we have already said again that the gold price system should be regarded as a medium and long-term system, and it has started again. So, I will keep communicating with you and will continue to follow up here. So if you really have a certain understanding of investment, of course you will know that, in fact, gold has ETFs, and you can dabble in it. For example, even in Australia, there are many gold ETFs listed in different states in Australia. Oh, I listed them on the ASX website, in its commodities section, and I saw that they are available in Australia. There are ETFs related to gold that are listed, but everyone needs to pay attention to how to choose among them, especially when it comes to physical gold. When should I consider investing? Do I need to hedge against my currency risks? These things can vary from person to person, so it might be a good idea to consult with your professional investment advisor or a licensed person for some guidance. I believe that when the weather is so stormy and there are so many noises, I may feel very uneasy. What should I do? But there is at least one thing that I really think you should do, which is to review your investment positions, because it may affect your retirement superannuation or other investment portfolios in your daily life. And this is a good time to review it and see if there is any difference. It's worth fine-tuning your assets. So, it might be a good idea to spend a little more time paying close attention to this, or you might really need to talk to some professionals to understand your situation better. Because what works for others might not necessarily fit your own risk tolerance and goals. So, it's really worth taking a serious look at it. I hope today's teaching session has helped everyone. If you have any questions, feel free to leave a comment or reach out to me to set up a time for a consultation. Thank you all. It's good to set up some appointment times. Thank you all very much.
Hey everyone, I'm Andy Wong. I'm one of the few people here in Australia and Hong Kong who is licensed or qualified to help local clients and companies with diversified investments, like my years of experience with US stocks, Australian stocks, SMSFs, ETFs, and so on. I hope to share my investment and life experiences with the Chinese community in Australia and Hong Kong through this YouTube channel. If you're interested in having a one-on-one chat with me, you can book a time through the link below the video or in the channel's content. Schedule a time with me. Thanks for your support. Remember to leave a comment, give a thumbs up, and share. Our teaching share doesn't include any investment advice. So, before you make any decisions, remember to consult the relevant licensed professionals for advice. Thanks a lot.